Now, the highly anticipated Fed meeting kicks off tomorrow. We will finally see whether we get a rate cut, as all the experts are expecting, and then specifically by how much we will see a rate cut. Joining us now from Washington to discuss is Nareit senior economist Calvin Schnure. Hi, Calvin. Thanks for coming on.
Good morning.
So will they or won't they, I guess, on the rate cut? And of course, everyone thinks, oh, absolutely. And then I'd ask you how many basis points you expect. And then if you look past that for the rest of 2019, whether you think we might get another cut, two more cuts.
Well, it's pretty clear that they are poised to cut rates this week. Not just the chatter in the markets, what the financial futures are pricing, but the members of the FOMC themselves have discussed making the case for the rate cuts. Chairman Powell, over the past month, has said that the case for rate cuts has become stronger. Most likely is going to be a fairly small rate cut, 25 basis points, and we'll see what they do later on this year.
Hey there, Calvin. I wonder, though, the shift from the Fed has been so dramatic over the past 7 months. First, you had them assuring us that they weren't going to raise anymore. Then they gave us the concession on the balance sheet in March. And then over the past 2 months, now we're talking about rate cuts. So assuming we get this rate cut this week over with, is that the limit of this Fed pivot? Are we done for now?
You know, it's difficult to tell if we're done for now. I'm not going to use the Fed's term as data dependent, but it's really interesting that we're even having this discussion. If you look at the economy actually has a lot of momentum. It's slowing. It's slowing from above trend last year. The 2017 tax cuts boosted the economy, but it's slowing back to trend growth. That's not a bad economy. Inflation is near the Fed's target. It's coming back up towards the Fed's target, but it's still below the Fed's target. So they would like to see more growth to firm the markets, let the economy run a little bit hotter. And finally, interest rates are really quite low. So this is a very unusual situation for the Fed to be talking about cutting rates when you already have low rates and a lot of economic momentum.
Calvin, I know at Nareit, you guys are focused on REITs and commercial real estate. How is everything going on with the Fed affecting that part of the economy? And then specifically kind of all the hand-wringing over just everything Jay Powell says and how much it has had an outsized impact on stocks day to day?
The first thing to keep in mind is that the commercial real estate sector relies on interest rates, but is quite healthy right now. We're not having overbuilding. I'm not talking about just the REITs, the Real Estate Investment Trust, but the broader commercial real estate of all types of properties that are owned. We're seeing fairly stable demand. You're not seeing a lot of speculative building. You've seen price increases, but these increases have been justified by rises in net operating income. That's translated into good performance for REITs. We're right in the middle of earnings season right now, so we don't really have a good grasp on what second quarter earnings are. But basically, REITs are performing quite well in this type of environment. A further decrease in interest rates, what that's likely to do is just give some extra support for the market. This is actually going to be favorable for real estate markets and for REITs.
All right, good stuff. And tomorrow we'll find out more when we see what happens with the Fed. Calvin from Nareit, thanks for joining us.
Thank you.